Yeah, you've probably missed about 4 jobs out, but it's fine.
Yeah, well, we've only got 40 minutes. I've already been told off for
that could either be taken as in a good way, Jeremy, that you're wanted, or in a bad way that you're not wanted.
Yeah.
So, Paul, what I really like about that statement that you've just made is how good you are at greening the industry, because you just said, I printed off.
Yeah, I did. I printed it off.
So I'm slightly concerned.
Yeah. I was going to make a comment. Yeah.
I was born analog, and there's most of the people that are
You were born on a log.
You guys are taking it to another level now. This is just getting ridiculous.
I've just got some $7.99 headphones from Argos, and they're working fine.
Yeah, why do you sound better than all of us?
This week we welcome Jeremy Duncombe to the Mortgage Mingle Podcast. Jeremy is the Managing Director at Accord Mortgages. With over 20 years experience in the financial services industry, Jeremy has made significant strides in enhancing the broker experience and expanding market share for Accord Mortgages. Jeremy began his career at Platform, serving as Head of Sales. He then moved on to prominent roles at L&G Mortgage Club before joining Accord Mortgages in 2018 as the Director of Intermediary Distribution. His leadership and strategic vision were pivotal in his promotion to Managing Director in January 2021. In addition to his role at Accord, Jeremy serves as a Director of IMLA, advocating for mortgage brokers across the UK. Anyway, look, I've said to a few people, and this might be controversial, but the best time I've had in this industry was when Labour were in government, when Tony Blair was Prime Minister. Now, you could argue that that was just the macroeconomic situation, it was just a coincidence or not. But, if we're being told that 1.5 million homes are going to be built in the next 5 years, that's got to be a good thing for everyone, and bringing back a mortgage guarantee scheme and all that sort of stuff, isn't it?
Well, Tories are going to build 1.6 million, and they were going to bring back Help to Buy. So take which you want.
I know.
Hold on, there's a pig just flown over.
Yeah, who's going to build them? And what's the appetite to build them? I think is probably the biggest challenge. It's great to talk about it, and absolutely fabulous news. But I just can't, like you say, Monty. Where's the pig? Because it just feels like it's a very tall order.
100%. It's easy to say you're going to build them, but to actually build them is another thing.
If you break it down, it is something that is achievable. 1.5 million is achievable. And if they do disrupt planning to make it easier to actually build in certain places, the builders do have an appetite to build. So obviously they're all very positive on the news. The problem is things that weren't addressed during the campaign, the dreaded Brexit word, and where do you get, and also the war in Ukraine affects this a bit as well in terms of the materials, the man or woman power to actually build the stuff in the first place. So actually getting the people and the materials to actually do all that is more of the challenge. But I think I don't know. And I think the planning is absolutely key. And if you speak to a lot of the builders, they'll say the same thing.
Well, the good news is
if they can really
go on, Monty. No, you carry on.
I think I'd finish.
Had you?
Yeah,
definitely.
It's irrelevant.
That's what you do. That's what you do.
It's irrelevant. I've bored myself, Louisa.
I've finished. Karen.
Yeah, whatever. I've done. So 300 new planning officers. Then that sounds like a great number, doesn't it? To go with the 10,000 that we've already got. But we used to have 20,000, so we've gone from 20,000 to 10,000, and we're going to put in another 300. So I think some of these headlines sound absolutely fabulous, and if you follow just the headlines, then I think it's a really good news story. But I think the next few weeks will unearth some more of the detail, and then we'll see what happens from there, really.
Yeah, to be fair, it's nothing that we've not heard before. I mean, every party that's ever been here said they will build more houses. They said they've got a plan. They said they will reform planning. But, the proof is the headlines are brilliant. Task force to set up to for stalled housing projects, reintroduction of mandatory housing targets, reform the national planning policy framework, all brilliant. And in 6-12 months' time, let's hope it's actually achieving something, because we need it. We absolutely need it.
And we've got this new land now, haven't we? This grey belt. The new phenomenon.
Yeah, I was talking about that this morning.
Car parks in green belt,
grey belt,
I think, is basically what they are, aren't they?
What does that actually mean?
And someone said this morning, actually, the grey belt does not actually give you enough on its own to build 1.5 million houses, which is why they're going to be taking on the NIMBYs like me.
Are you a NIMBY then?
I'm a proper NIMBY. And everybody. Well, I mean, look, it's so Radlett, where we live, you know, Lee, they've been trying to build 500,000 homes, and that's not the problem. The problem is it's the infrastructure around it. The roads can't cope at the moment. There's no places in the schools. Doctors. You can't get a doctor's appointment. So unless they're building this infrastructure, they have talked about that. They've talked about new towns, etc. But they have to have that transport infrastructure around it. And they have to build the schools, the hospitals, and the doctors' surgeries as well.
Exactly.
And that's
we've got the same thing. Exactly the same thing in Cuffley. It's the same thing in Potters Bar. You look at the local planning and what they're proposing they're going to build. It doesn't work with the way it's structured at the moment. And unless they adjust that, it's all going to break. The whole thing will break. But I don't know. It's very difficult, isn't it? Everyone goes on about these targets and manifestos. 300,000 a year is great, but can you get the labour force to match it? It's the first thing you've got to look at, which I don't think they will. It's about 3 months to get a brickie to come and do a conservatory at the moment, let alone trying to build 300,000 houses. So I think it's a tall order. I really do think it's a tall order. But more importantly, it's instilled a little bit of consumer confidence, which is exactly what we need right now. So even the headline may give us some, some optimism and a better market.
And it's like the start of a football tournament, isn't it? Every time, you say England, you're not going to get carried away again, but you're like, I think it's coming home this year. You can't, and there's a new government, and you've got to, we should be positive, shouldn't we? We should give a new government the benefit of the doubt, and at least.
But so you're saying the last good government was 1966, Monty? Is that really what you're saying?
I think we can go before that, actually.
The thing is, there's already been statements of actually we're in a worse situation than what we thought we were. It's like they're already building the excuses.
We knew
not being able to hit the target.
Happen, didn't we? But like you say,
we knew that
we've got 5 years of relative certainty. So that is good. The certainty that they will make some changes, because they're going to have to do, whether they be good or bad changes. We've got that degree of certainty. So I think ultimately. We're probably in a better place, but merely because of the fact that we've got some level of certainty.
Yeah, stability is everything.
Yeah, and you're the swap man, Lee. Swaps have been very settled, so we have to see.
Yeah, very
if
settled.
Anything,
actually,
they're slightly off. I don't think that there's been any blips. And
they're still pricing in 2 cuts, aren't they, over 12 months? Is what they're still looking at. And I mentioned it this morning, not sure if you saw it, some brave investment banker in the city has decided to put 2 million on there being a 0.5% base rate cut in, I'm sure it was August or September.
0.5%?
But,
what, 0.5% straight away?
Wow.
Straight away, yeah. 2 million they put down on that. Brave bet. It's obviously hedged somewhere else, but,
That's massively hedged.
Are they thinking that they're going to drive that direction of travel? Because let's face it, every investment banker, people will go, oh, yes, no, we'll do that just to please the investment banker. If anything, they're going to do the opposite, aren't they, as a result of that information?
Yeah.
I mean, things like the elections had no effect. It's external factors that are still driving through. If we don't get a base rate cut in September, which is where the money is at the moment, I think that will be the shock. And that's what will affect swaps, and we could still see them go up. And this is what we keep needing to tell our customers and our brokers is that there's no guarantee they're going to keep falling.
Don't wait.
No,
you're absolutely right.
Which creates a lot of work over summer, doesn't it, Jeremy? Everyone's going to book in their deals. They're still going to hedge, which is what they should do. But I do sense there's going to be a lot of rebroking and bits and pieces going on over the summer, if I'm honest.
Yeah, although we have a conversation.
That's how it's set up.
Does,
that bloke in the city, his name wasn't Andrew Bailey.
Anyone know?
I bloody hope he was.
Rachel Reeves, you never said it was a bloke, did you?
No.
True.
So Matthew Pennycook, the housing minister, do we know much about him?
No, I've had a look on Wikipedia, see if I can figure out much about him. He's a very well-educated individual, came from a working-class background, so the usual Labour piece, I think. But other than that, I don't see much else. He's been a shadow councillor or MP for a while, focusing on housing, but that's all I can see from him.
And so he's effectively reporting into Angela Rayner.
Let's see how long we can give him. Should we? That's where we should be taking a bet, not about whether or not we get a drop in the interest rates. It's how long that we see this housing minister in situ for.
Yeah, that was one of the big things when we sat down with Rachel Reeves and Lisa Nandy. It was one of the big things we talked about was that merry-go-round of housing ministers. And that was the one thing they really agreed with. So it'll be interesting to see if that does happen.
You were impressed, Monty, weren't you, with Rachel?
I was very impressed with her. I was impressed with both of them, actually. I think Rachel has... I'm talking like I know her. I don't. I've only met her a couple of times. But
they know you. They mentioned you.
I thought she got it. They really don't. And I know they don't because I did bump into her at the FT festival, Financial Times festival, and I said, "Oh, hi, Rachel," and she just looked at me blankly and said, "Oh, hi." And obviously, didn't know who the hell I was. But anyway, I was really impressed. I think they gave the impression that they really understand the market. They understand what people's frustrations were. They understand that there's no quick fix. They understand that housing is very important to the economy and everything that they've been saying. I know some people have criticised already and said, well, there's no detail there, but there can't really be at this early point. And her background is, she's got a background in FS, hasn't she, and Bank of England. So she's
she is an economist.
I think she does understand it. So I was impressed with them. But politics it's one thing being out of government, it's another thing being in government and the push pull of all different things. And a big majority can be a curse as well as a blessing. And how they deal with all the different factions will be very interesting.
Jeremy, obviously you can't go into commercial details about Accord, but generally speaking, do you revise and re-look at your targeting because of a different government, a new government, or is the trajectory the same because the macroeconomy isn't affected too much in the shorter term?
Yeah, it's the latter. I mean, you set your plans based on what you expect to happen. So you forecast the market, you forecast what's happening. To be fair, we mentioned earlier, the new government was fully expected. So, it hasn't derailed anything. I think the shock of anything different to a Labour win would have probably affected the markets more and made lenders sort of sit up and look. But, to be fair, everything's as was before. Nothing's changed. Swaps haven't moved. The size of the market expectations probably hasn't moved yet. But I suppose in terms of that confidence point that was raised earlier, that's the hope that there is some more positive sentiment. Whichever party got in, you knew you hopefully had some stability for a while. So, you now have theoretically some stability for the next 5 years. Let's build off the back of that. But no, from a lender point of view, you make your strategy for the next. We've got a strategy that takes it out to 2030, which is we're a year into. So full steam ahead on that, and the political situation hasn't derailed that at all.
Are you as bullish about 2025 as others, Jeremy? Cool.
Yeah,
expecting a good year.
I think this year we're great start, slow middle, and I think we're hoping for a better end. With some stability and again a little bit of optimism coming through. I think there is upside in the market if we now start to see things settle down. If rates do start to drop, I think there is so much pent-up demand that we saw in the first quarter that will come back. People have probably put the foot on the ball. They've waited a little bit. This is out of the way. I don't know what they were expecting, but basically people have waited a little bit. And I do think that, if we do see rates start to come down, even by a little bit, and I think that first base rate cut's really important. Not that it will affect the market, not that it should do anything with swaps, but I think just people seeing a base rate drop will give them confidence to go and make some decisions. So I think once that's in the second half of the year, there are then more base rate cuts predicted for next year. And therefore that should drive some volume through and some goodwill for next year.
And you've got two really strong years for remortgage opportunities. You start to see people coming off 2 and 5 year fixed rates over the next 2 years. It's massive. So if we do start to see rates drop, then clearly the opportunities for brokers and for lenders alike are just enormous.
Yeah, I think for brokers, though, I think you've got that bit where that value of advice is even more important because people are going to be still coming off 2% rates and coming on to rates that are between probably 3.5 and 4.5. And that's still going to be a shock. They're still going to need that advice. It's not as if they're coming off and just going to be able to do a PT really simply. They need that advice still. So I do think there's some great opportunities.
And we mentioned this earlier with that shift of lenders, most lenders now moving to 3 or 4 months on a PT. Brokers have that opportunity to go 6 months earlier, which means brokers should be a little bit more active with their remortgage clients. Should be engaging earlier, gives them a bit more of an opportunity. But as a lender, Jeremy, you've always massively pushed first-time buyers. Yeah. That's been a huge part of your market. You're expecting that to be bigger next year?
Yeah, I think that everybody seems to be pushing first-time buyers as one of the solutions. So building more houses, that helps. Getting first-time buyers on the ladder, getting new build markets moving. That there is pent-up demand. I think the good thing you've got with first-time buyers, they're not tarred by previous low rates. So they're probably paying a rent which they're comfortable with. They can pay a mortgage that's similar. They've not got that baggage of, I used to be paying 2 and now I'm paying 5. So you've got first-time buyers who are saying, I want to buy a house. I'm now confident it's happening. And we saw with our 5K deposit mortgage that the pent-up demand and the people coming and really interested in that product because they wanted to buy a house was definitely there. So that's been, for us, that's confidence that the first-time buyer market is there, and it's certainly one we'll be pushing.
Has that been as popular as you were hoping? Has that done well?
It's done really well. More so. I think we were sort of not sure how much take-up there'd be in terms of are people out there ready to go. What we found is that the demand was really high. The take-up was higher than we expected. We've then got a load of people who've done decision in principles who said, brilliant, I've now got a yes, I now need to go and find a house.
We can't find one.
And that was a challenge. So we've got a lot of disappointed people who say, I know I can get a mortgage, I've got 5K deposit, I can't find a house. So, more supply, more houses being built. That demand is definitely there.
Is there a challenge going on internally in respect of income and affordability then for first-time buyers? Because as you mentioned, if they're already paying a rent that is easily commensurate with what a mortgage payment is, are you looking internally to say, look, we really need to adapt to the new world, if you like?
Yeah, there's definitely some of that. The 5K deposit fits a particular group of people, but it doesn't help those who've got affordability challenges. It helps people who've got a decent income, who've got 5K deposit, but haven't got the bank of mum and dad, if you like, to bankroll them or to get them into a lower loan to value product. It doesn't necessarily help with affordability. We are as a lender calling for a return to some form of help to buy. We feel it's not necessarily just a new build product. I'd like to see it across all tenures. New second-hand properties as well. I think that would take away some of the issues around house price inflation. But it's the affordability challenge we've got to find a way to solve, because there's another chunk of pent-up demand from first-time buyers who have a decent deposit but just can't get on the ladder from affordability.
I don't know if you can talk about this, Jeremy, but will you be looking at the own new? Is that something that you guys will consider?
I think if the demand's there, what we've got to talk about is talk to developers, talk to brokers to see whether the demand is there for that product. I think there are lots of different schemes for first-time buyers out there. The simplest way is, can lenders innovate on their own products to get the the products out there to market. Can we do something on affordability? I think Own New, Deposit Unlock are schemes that are out there, and initiatives like that are brilliant. But it's the take up, and it's it's whether people are actually taking them and wanting them, or are there better alternatives?
I mean, if you're looking at 1.5 million houses being built in 5 years, you could argue that the demand is going to be there, isn't it? If they hit that target, obviously. But obviously getting the developers on board is another thing. But you've always been quite an advocate of pushing first-time buyers and helping people get on the ladder. It'd be interesting to see if you go in with that.
Yeah. Watch this space. I'm not going to give anything away today, but
come on.
We're not just
No exclusives.
We'll look at what's out there. If we can do stuff ourselves, if we can develop our product range, the 5K deposit has gone down really well. Can we do more with that? There's a lot we can do to try and help. But it's a big area for us.
So, Jeremy, you are a strong advocate for brokers, aren't you? And just wondering what initiatives you've implemented at Accord to support and enhance broker experience.
It's interesting. I've been there 6.5 years nearly now. And those 6.5 years have flown by. You're only my agent, Paul.
No, sorry.
Yeah, he's right on the cusp now, isn't he?
No, I'm very, very happy. So the 6.5 years have been great, but we've gone through a real overhaul of what Accord was to what Accord is now. And I think during that time, there's tons of stuff that we've done. Really focusing on the broker experience, consistent service, being there for the broker to support them, but even things like the growth series that we do, which is a way of helping brokers improve their business. Free library of content, which is out there that helps brokers on all sorts of things, whether it's education or whether it's contact strategies, whether it's recruitment. There's so much content on there, which is brilliant. The welcome boxes that we send out from the broker to the customer, so they come from the broker, not from us. And it's those sort of things I think that we've really tried to evolve. But underlying, we've got to want to write the business. We've got to show a common sense approach, and we've got to be the broker's choice, and that's what we've really worked hard on. And then the next few years, that's what we've got to develop. People will be chomping at taking that mantle, and they'll be trying to chase us. So we've got to keep moving faster than the competition. So it never stops, Paul. But
I know
we're pleased where we are, but we can't be complacent.
And on that, talking about others biting at your heels, if you like, we, as in the group of us here, spoke a few weeks ago, but we never really put it in the podcast about the Building Societies Act change that's allowing building societies now to use more wholesale funding. And will that affect what you do?
Yeah, it won't affect us really, because we already do a lot of that. So we have a real mix of funding. So obviously from our savings customers, that's a big chunk of it. But we already do securitizations, whole loan sales. So for a building society of our size and similar size, probably not a significant change for us. But for the smaller building societies, it will help them. It will help them compete. But it's also interesting that the new government have talked about enhancing the mutual sector. It's one of the things they've talked about how they can get the mutual sector to be a bigger and more important sector, and that's great. I think that mutual sector has a lot to offer. That will help some of the smaller lenders with their funding, but I think generally the building societies have come to the forefront in the last few years, where other lenders have not been able to support. Off the back of COVID, they're coming back into the market with high loan to value products, and really looking at those underserved sectors. That's something we really want to continue doing.
Yeah, interesting, very interesting. And I think the whole sector is going to be quite exciting to watch over the next couple of years.
There's all sorts of room for different lenders. I think that's a good thing about the market. It's no good if we all do the same thing. We've all got to find our niches, and whether it's as a building society, a large building society, small building society, a specialist lender, a buy-to-let only lender, we've all got our niches, and we just got to keep carving those out.
Will a permanent mortgage guarantee scheme make any difference?
Yeah.
I think we reached that conclusion a couple of weeks ago, didn't we? That it's
nice gimmick for people who don't understand how mortgages work. But No. For lenders, absolutely no difference. We're all doing it anyway. The time for that has passed. It's good, useful at the time, not because people used it because it's really expensive, but because it gave people the confidence that the funding was there if they needed it. We've all gone in and done it ourselves. We're all well capitalised. We've got liquidity. It's risk appetite. So no, gimmick.
Hate it when you sit on the fence, Jack.
No, he's always been like that. Yeah. So
the other thing actually is I read about they want to give first-time buyers first dibs on property. How the hell does that? How do they do that? Isn't it? How do you do that? But how do you give them first dibs? Because surely it's about
wasn't it area specific?
Prices.
So wasn't this building within particular areas, and it was for the people that lived in those areas?
They've done that with second homes
and first-time buyers. Yeah,
they've locked out second-time buyers and holiday homes. That's been timed out.
Yeah, I understand how you can do that a lot easier because you still have a bit of a market.
Yeah,
but you're right, Monty. You disenfranchise other potential buyers. I mean, if I was moving from York to London, like I would ever do that. But if I was, then clearly I wouldn't get first dibs on a new build in a particular area because I don't already live there. So if my work took me there or schools took me there, then that's going to completely.
These things are great headlines, aren't they? They're great headlines. Exactly. I actually printed something off, and exactly from the Labour Party side, local authorities will prioritise first-time buyers, ensuring they have the first opportunity to purchase new homes built in their areas. What a great headline! What a great sort of soundbite. But then you've got the devil's in the detail, isn't it?
So, Paul, what I really like about that statement that you've just made is how good you are at greening the industry, because you just said, I printed off.
Yeah, I did. I printed it off.
So I'm slightly concerned.
Old school.
Yeah, I was going to make a comment. Yeah,
I will eat it later.
There's your opening salvo, Paul. Louisa is a worse person than me, can I just say? Because I was going to make a comment. As soon as you meant that, I was going to interrupt and go, oh, nice waste of paper there. But Louisa's actually...
You didn't draw Scotland on your map, though, did you, Paul? On a piece of paper?
No.
I've not seen the map today, Louisa, actually.
It's a bit out of shot, isn't it?
Ironically, it's red, and it was always red, wasn't it? So that clearly was the direction of travel, irrespective of whether we knew what was going on. There's something else that I wanted to share with you today, which you might not have noticed, but...
is there a warning before we do this?
There's no warning, it's fine. There's no warning, but it's the future, it's the way forward, right? So today, as you may or may not have noticed, I'm not wearing glasses.
Oh.
You're not wearing glasses.
And the reason being is because I've gone for the mono lens, which basically means that it's because my distance vision is perfectly fine, but my close-up vision is really poor. Literally, I have one lens in, which I can see
in one eye.
So one lens in, and because one of them, one kind of overcompensates for the other, I can see perfectly well, both close-up and distance. One lens.
That's happened to me on a few nights out, Louisa. A contact lens would ping out, but I feel like I've been punched and I can't see anything.
It's called mono lens.
How many walls have you walked into?
None. It's not even fuzzy or anything. It's absolutely brilliant. I love it. And £8.50 a month on a subscription.
I'm going to look that up.
Hang on.
Chris Eubank.
We're over here, Paul. We're over here.
Yeah, exactly.
Very good.
Lee, that is brilliant.
We talk about
I just needed to share that with you.
What a great impression, Lee.
Really important.
Do you have any hidden talents?
No, not really. No, I'm a very open book, Paul.
Oh, I know that.
I've got no talent.
What's your party trick? Have you got a party trick? Keep it clean.
No, don't.
No, I'll have to think about. No, I'll come back to you on my party trick, but no, unfortunately not. I can't sing.
I think this is another line of questioning for our guests.
So look, so can you see up here, up there?
It's a blank wall. We just see white wall.
No.
Yeah.
Oh, can you not see?
No.
Can you not see on the wall?
There's
Just still white
something
wall.
on the wall.
Oh, I can see the record. You've got the record.
There's my hidden skill.
Yeah.
What,
I've seen
framing
the
records?
record.
Is that your hidden skill?
No, this is my gold disc for winning an international singing competition.
No way.
No
There you
way!
go.
Wow.
You just made that up, didn't you?
No way.
from the look on Paul's face, I very rarely see Paul
why weren't you on the
stunned.
single?
But Paul is stunned. Yeah, you're talking to two people who painstakingly put together a charity single, and Lee is a singer. I know. Louisa
Steady.
is.
I can sing. You just choose to
A
ignore
singer?
me. Every time I've offered
Yeah.
to sing for you, you've just ignored me.
Yeah,
Really?
Louisa's
You've
a
never
singer.
offered
So
to sing
Jeremy,
for me.
tell us about your
Are
singing.
you really a singer?
No, I'm really not a singer, and that's why it's so ironic. I did win.
What were you singing when you
So
won
we were
that?
doing 500 miles in a ski bar in Canada where it was called the Big White Idol. So it's a knockoff of Pop Idol. And we were dressed up as the Proclaimers, and we won for comedy value. But we did win an international singing competition, and we won ski lessons for the next day.
Brilliant.
And that was our big prize.
Yeah.
Yeah. So there you go. So I've got the
Gold
disc.
hidden
What I'm
talent.
more impressed at is the fact that you've got that on your wall.
I would have that on my wall. To be fair,
Can you do a rendition for us now?
a disc's a disc.
No.
Yeah. Is it still playable? Can we get it played and downloaded?
No,
That could be. Maybe this can be the new theme tune.
Oh dear. Anyway, back in the room. Louisa, what's going on with the rent reforms? What's going to happen then?
Well, we're going to hear in the next 100 days, aren't we? So they've prioritised the Renters Reform Bill. I think going back to the certainty, we will get that level of certainty. If they do not impose, because it's not an imposition, but if they do launch the Renters Reform Bill within that 100 days, we've still got the challenges around the courts and the reforms around the courts, so that's still going to cause us problems. But at least we'll know what we're facing into, whereas clearly prior to a new government, we haven't really known what's happening with the Renters Reform Bill. So it's a concern, but it's one of those things that we'll just crack on and deal with as and whenever it hits us, really. So we've got 100 days to wait, and we'll see what happens. But I think potentially a bigger challenge is greening the PRS, because if they do bring back in those targets to 2030, which is literally only just pushing out the previous targets by 2 years, if they bring those back in, we've got to green 1,700 houses a day. That's just within the PRS. So it's enormous, and it's not something that I think is potentially doable. One thing that they are talking about is actually they're not talking about EPC-C anymore. So they're just talking about generic improvements. So again, waiting for the detail. If they say EPC-D, that might help. Or if they just say generic improvements that look like this, then that will also help. But if we have to green to EPC-C level, then it's a phenomenal number of properties.
And we'll also be able to put wind turbines in our gardens, won't we? Now? So
we can
that's
put
good.
wind turbines in of any size or structure. That's absolutely fine.
Good news.
And if that happens, Louisa, do you see a flood of properties coming back on? Something that's going to help first-time
So the
buyers?
challenge with that is going to be around capital gains tax, isn't it? Because you've kind of got the issue around if they dispose of these properties and there's an increase in capital gains tax, what's happening there? I think what we need to think about, and as lenders and as the broker community, is what that succession planning looks like for the private rental sector and buy-to-let landlords in particular. How are we going to support them to build out that succession plan, whether that be to sell on to other buy-to-let landlords, or whether it's to succession plannings within their own family to try and avoid maybe some of that capital gains tax.
Which will tie in nicely with the September budget where, potentially the autumn budget where they're talking about capital gains increasing,
absolutely.
right?
I mean, one of the things that I think they potentially could suggest is where landlords sell to their tenants. So you then get a discounted CGT, which might well work. But going back to some of the points that Jeremy's suggested, have we got a have we got a group of tenants that are in a position to buy? If we have, why have they not already bought? So, you kind of think a lot of these renters are renters out of choice, not necessarily necessity. So I think there's all of that needs to play through.
Yeah.
But going back to my initial commentary, that level of certainty, once we know what the Renters Reform Bill looks like, then we'll know how we can work within it.
I think that would be a popular policy, wouldn't it? And in terms of selling properties to tenants.
Yeah, do you know?
I think that would help some buy-to-let landlords out, and it would help some tenants. And I think
it's likely to be those smaller landlords. I don't call them amateur landlords because they should all be professionally respective of the size of their portfolio. But those smaller landlords that just say, "I'm out of here now," the chances are that they've probably got a terrace property or semi-detached property that is in a position to sell to whoever their tenant is. Whereas some of the larger landlords that have maybe got the bigger portfolios and have diversified into HMOs and things like that, then clearly they're not going to be able to sell them to their tenants because the tenant's not going to want to buy a shared living. They're not going to be wanting to be in a position to do that.
You've probably also got the challenge though, where a lot of people rent properties they could never afford to buy. So if you're a first-time buyer, so if you're a tenant, you probably are renting a 2-bed flat. The best you could afford is a 1-bed flat. So people, tend to say, I can't afford to buy the property I'm renting. I can afford the rent, so I need to use that rent on a property. But when you commute that, you couldn't afford to buy that property with that rent. And that's another challenge.
And also, a lot of lenders won't lend at under market value. So you've got all of those challenges as well. So if you said, I'm going to discount this property, blah, 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 then they'll lend against a discounted purchase price. So then that might not help either. So there's lots of other things that we have to think about.
Is there a route back to the mortgages that we used to do years ago where if you can provide a demonstration that you've afforded the rent for 12 months, you're not automatically qualifying, but it eases the underwriting requirements of new lenders?
Skipton do, don't they? Which I think is absolutely brilliant. It's a great...
Can we not see that push out more to other lenders?
Yeah, the thing with the Skipton one is they still have that affordability at sort of 4.5 times income, don't they? What I'd like to see is that actually go to, say, 6 times income, for example, on the basis that for the last 5 years you have afforded it.
But then you need the regulator.
That's proof of affordability.
Yeah.
And again, that's something that Labour were talking about. They were definitely actively talking about how they could get rent to be counted more openly as a guide to affordability.
Yeah.
I think if you look at some of the lenders that will allow like-for-likes at a higher income multiple, that the same thing should apply to rent. And if regulators can look at that and they can look at what's been done, do exactly the same on that.
Yeah.
The footprints there.
I don't think that's a lender. It's not that lenders don't want to do it, Lee. I think it's we can't.
Regulator.
We can't. And therefore...
But can you not push on the regulator there?
I think it's something that, trade bodies are doing. IMLA have done some lobbying on things like affordability. So UK Finance, the IMLA Building Sites Association, we can lobby. I think it comes down to the regulator saying, is this prudent? And then lenders making their own decisions on risk as to whether they feel that's prudent as well. Ultimately, we've got to be lending to people who can afford to pay back, and that will be a lender choice based on the rules that they're given by the regulator.
Whichever way you turn.
I think you've also got the 15% of your business can't be over 4.5.
Yeah, I think what you've got now is a market where the vast majority of people accept that over time rates will come off a little bit. And then they will probably maintain around a normal between 3.5 and 4.5. That seems to be the consensus. And if you're working with that, then maybe people can start to have a look at some of the rules that are around it. If you're in a market where rates are only going to go up, then you've just got to be really careful. It was absolutely the right thing to do to be able to stress or to have to stress at 3% above revert rate when rates were down at 1-2%. It had to be done because we knew that rates were going to go back up again. To be fair, that was taken off, so lenders now have to stress about at 1% above revert rate, which again is prudent, but you're starting to say, well, now that could be when rates were at 6%, you were having to stress at 7%, which was similar to what you had to do before. But in a downward market, if we feel that's more sustainable, then again, it's time to probably have another look at that. But you don't want to go too soon, and you certainly don't want to be putting borrowers into a position where in 3 or 4 years' time they're struggling to afford their payments. What the rules have done up to now is mean that we haven't seen the level of arrears or the level of issues on mortgage payments that you would probably expect with rates having gone up so quickly and by so much. And that's down to prudent lending, good regulation, and a different mindset. We don't want to lose that.
No, agreed.
So, Lee, what's going to happen now in between now and September? Is it are you off sort of golfing and stuff like that, and just getting ready for that massive smash push to the end of the year, or what do you think?
I think the can's been kicked down the road a little bit again, and I think everyone will be waiting for the autumn statement, really. So I'm not expecting a massively busy summer, if I'm honest with you. And because of that, we have launched the inaugural Prolific Fishermania competition that will be, that is as of next week. But no, all jokes aside, I don't think that
you should run out of events to go to, Lee. Run out of awards events to go to.
I've played too many golf courses now, Jeremy. I've got to turn to a new sport, which is fishing. Actually, parts of it, all jokes aside, is about mental health. So we're trying to pull some of the brokers away, put them in front of a lake, calm them down, and just get them.
And remind us when it is and where it is.
It's the 17th of July, so not long, and it's in Shepherd's Way Lakes in Brookman's Park. So we've got a few coming down. We've ordered a wonderful trophy for the winner. The Jules Rimet of fishing is going to be available for someone to win, which is most exciting. But I don't think there'll be a lot of work around. I really, really don't. I think people are going to wait in terms of purchasing for a little while. I think we're working on remos up to October, November time. But the purchase market, I still think, is going to be quite quiet. I don't expect swaps to do a great deal. I think they've already priced in their 2 cuts, so I don't think we'll see much movement there. But I do think that, as we've said before, there is a stability with the swaps now, and if it remained a bit of a constant, so it might hopefully give lenders a little bit more optimism when they're pricing, because they've stayed stable for quite some time.
And what happens if you get caught out, Lee, and actually it's busier than you think it's going to be?
I would love it to be busier than what I think people are expecting. It just, for me, it's not sounding like it's going to be massively busy between now and September. But I do think the last quarter is going to be really, really strong. So I think enjoy the break while the break is there, make the most of the break, and get ready to come back and get seriously busy in the last quarter of 2024. That's just my opinion, but that's the way we're seeing things at the moment. And I would love that to be wrong and it to be busy as of August onwards, but it doesn't. It's always a quiet time of year.
I think the resi market is massively affected by seasonality. I think less so the buy-to-let market, but there is still seasonality there. But yeah, absolutely. Oh, well, so you're going to be romping home just after the IMLA dinner, as in business-wise, not romping home from the IMLA dinner.
Is watching. I think it'll be a little busier than that.
Do you?
Do you know what, Monty? I agree with you. Yeah. I think that the sun is going to come out. It's going to start shining, and people are going to start to get an appetite to buy. And I think the level of confidence that we'll see over the next couple of weeks is really going to drive that market. So I'm like you, Monty. I think it's going to be busier.
I certainly don't disagree about the mortgage market. I think the mortgage market. I'm not sure about the sun. So I'm not sure I'm going to see the sun.
Listen, I've now been using Daily Dove. I'm not going to get a suntan this year, so literally I am Daily Dove. I look like I've been on holiday for a fortnight, and this is just Daily Dove.
You've got Stop. What is Daily Dove, please?
Is that a product endorsement? Are you being paid for this? Do we need to?
The fake tan products are available.
Okay, so it's fake tan. Okay.
Yeah, right. Just put it on every day. And literally, I was really white when I've started, and I'm going in the direction of a full-on Caribbean sun tan.
Right.
You know, Paul is going to come next time, and he's going to look orange. Daily Dove. He's going to. No, Paul, you've overdone it there.
No, yeah.
Maybe not, Monty. What I will say, you mentioned this earlier, is if if we see 5-year fix start with a 3, I think it's a game changer. I think if we see a 3.9 something or something come out, that could change a whole.
On the resi at the minute, what's the sort of average?
I don't think we'll see that before the summer, though. You got someone's come out with a 4.19 now, 5-year fix.
417 edged out as well. Yeah.
Yeah. So it's getting there. I don't think you'll see that until September, if there is a cut. It all depends on the language of the Bank of England, doesn't it? If they do cut and they're quite bullish about it, then you might see swaps dip enough for lenders to start with the cheeky 395.
I've learned another phrase this week, which I think is quite important, and I realise I'm not one of these. These people that were born digital. Now, I've heard it before, but it's just becoming more prolific, if I may use that term. Apologies. But I was born analog, and there's most of the people that are
You were born on a log?
I was born on a log. My mother will tell you, a dreadful experience. Well, I just think it's this new term, or an existing term, that actually sees all of our customers that have this digital experience and a digital expectation. So that they're going to be looking for something very different to what maybe we looked for when we were looking for our first mortgages.
I think we're near the end now. And Jeremy, it's been brilliant having you here today.
I've enjoyed it. Thank you for having me.
We've had the voice of intelligence and knowledge in the industry, rather than the rest of us making it up as we go along.
You're saying nice things, and Louisa's just like sabotaging the whole thing.
Look, I haven't eaten them all, but that's what it is. Yeah. It's like a little turd, isn't it?
Yeah.
Louisa, everything isn't about you, okay?
It is.
We have a guest.
It is. It's all about me.
We are all off to go and get our daily dove. If you stick around to the end, there is a discount code. And it's you get it from Louisa.Sedgwick at Paragon.
I think
can I just also say, daily dove.
Yeah, especially
Can I also say to any
exactly
lovely?
Can I also say to any advertisers watching? If you do want your product advertised by Louisa in these podcasts, you can do it, because she is seamlessly doing it. Whatever you want advertised, drop us a line, let us know.
This is really good stuff, this.
What is that?
We can make money here.
Lions, mate.
Lion's Mane. I've heard of
We
that.
can talk about Lion's Mane, but again, that is after the watershed.
Is that a podcast in its own right?
No, that's another podcast. That's after the watershed, that one.
Tell us something, Louisa. Jeremy, you must be, I know you've done a lot of podcasts in your time. Is this like possibly the weirdest experience you've had?
I did get warned that I had to watch some before I actually came on to know what to expect. So I did watch a couple and then decided to still turn up. Yeah. So...
You've been a great sport, yes, we all go back a very long way, don't we? So it's great that we can have a bit of fun like this and talk about some serious stuff too. So thank you very much.
Yeah.